you bring up there maybe some red flags. Is there red flags or things you stay away from that you maybe signs when you're studying a company that is a deal breaker? I guess you already talked about you stay away from certain industries now, but I'm just curious if there's other red flags, things investors could be wary of or look out for when researching a company.
Yeah, with respect to management-related red flags, the more important ones would be compensation issues, incentives and compensation issues. I've looked at a U.S. medtech company, for example, phenomenal performer, but the incentives were based on purely top-line revenue. The senior management team gets paid if the revenue was about 36% or something. So it was a medtech company performing well, attractive valuation, good ownership interest. It met all my criteria, but except when I started looking at the proxy and talking to the IR team about this specific issue, I wasn't necessarily comfortable with it. So most of the time I find red flags in incentives and compensation issues.
And Geoff, how about you? Same question. Any red flags you could warn people to kind of?
In general, red flags. Why are they listed in the country they're listed in? So they're domiciled in one place, listed in others. Can be a big red flag unless they understand why they're doing that. Why are they incorporated in some place unusual? Usually their home state or Delaware would be the logical ones. Other places you want to know why they're doing that. Using an accountant that's unusual, it would make sense that they should be using an accounting firm that's near them in some way and that has enough people that could supervise them, and is this kind of accounting firm that others their size normally use, and especially that they're not the only firm in that they're not the only public firm in that industry or something that accountant audits. So a bunch of banks in one part of the country usually are mostly being audited by someone who audits a lot of banks. You shouldn't be the only bank being audited by a firm that doesn't normally do that. So those are the ones without meeting with management stuff. In terms of management, promotional management, that's seems overly interested in how you're reacting to what they're telling you. They're doing too good of a job of selling you, and especially management that has a poor grasp of the granular stuff about the business. They are very happy talking to you in generalities and things like that, but when they get a specific question, they kind of direct it to more of a talking point. Maybe it's possible people down in the company know those things and they don't, but that's a little worrying.
Geoff, I've heard you talk about Nevada domicile companies.
Yes.
Maybe you want to mention that too?
Yeah, so and we've invested in companies that are domiciled in Nevada, but the reason for doing that is usually, unless you're a really old California company, some of them did it, but other than that is usually because it offers better protection against fraud. In the case of fraud, it's harder to have personal liability issues, personal criminal issues, things like that, than you're going to have in other places. So it's more likely that the company could get in a lot of trouble and you as an officer will not. So that is worrying, especially if a company moves there from somewhere else. Why did they do that? It's certainly a popular place for people setting those things up. Now, like I said, we've invested in ones that have done that. And the truth is the reason they did it originally was exactly what I'm saying. But then a clean management came in, pushed them out, and they never re-domiciled, which is not unusual. It's not unusual for companies to not want to spend too much money, time, effort to switch to a better place that way or to switch auditors or whatever. It's the switch in the first place that's concerning. The status quo thing is not so much concerning.